Today is January 28th, 2020, and it's 9:39 a.m. in London when we're doing this market update. We should be live in a minute now, streaming directly to you from London. My name is Alejandro Zambrano, and I'm the Global Chief Market Strategist with ATFX. I'm also the Editor-in-Chief with Investing Cube, which is a site I created to provide you guys more information about the markets and teach you a little bit more, maybe for people that don't know too much and people that already know a bit. Could be a great source of finding trading ideas and the news that you might need to trade better. So that's the purpose of Investing Cube. Okay, we're going to take a look at the markets, and just by looking at the headlines here, you can see a lot about the euro. So sorry, about the GBP. On Thursday we have the Bank of England coming up, and that is something we're going to talk a bit about. And then we of course going to talk about the latest in the coronavirus, and we are going to start out with the markets though, and then we're going to talk a little bit more about those bits and pieces. Okay, let's begin. So this is the euro versus the dollar, and a few days ago we said look to sell on a break to the January 17th low. Remember, I was bullish above that level, and the market did go upwards at one point, but eventually it did come in tumbling, and the market took out this level, and we reached first support level, which is this level here, which is the November 14th low. And around that level, it's probably a good idea to book some profits where we are right now, half maybe. And then if we do have a swing to the upside, which wouldn't surprise me, if we just go up to 110.50, I think people are going to be looking to sell there again with stops just about 111.09. Now here's the GBP versus the USD. It is under pressure, and you can probably see I made some adjustments here. So I had the idea was to buy at 130. The market is now 130.13. So, but what I did here is actually reduce the buy spot to 129.84. Because what's happening is that the dollar is doing quite good. It's gaining against the euro, against the pound, against the Aussie dollar and the New Zealand dollar, and against the CAD. So what's happening is that it's unlikely for the pound itself to remain strong in the face of all the other markets coming down. So here, from a purely technical perspective, down here, it might be possible to get involved and buy a bit at 129.84, but this is not really a great opportunity, I think. But you could, if you're really bullish, buy here as well. If you think on Thursday that the Bank of England is not going to cut interest rates, then that is potentially a good opportunity to get involved. Why? Because the expectations for the Bank of England to cut interest rates, let me see here, they were at 460 right yesterday, right? I think there was 60% likelihood of cutting rates, 59 to be exact, I think it was. 57 right now, and yesterday was at 60. So the likelihood of cutting interest rates right now at the meeting on the 30th of January is at 57. And the likelihood of leaving interest rates unchanged is at 43. So if you're in the camp where you think they will not cut rates, then clearly you want to be long, because what's going to happen is that if they do not cut, then all of these 57% are going to be surprised, and you're probably going to see the pound gain a bit. And probably against the euro could be good, to check out. My personal view is that they can actually cut. I think they're gonna cut. If they don't cut now on the 30th, they're probably gonna cut on the 26th, because per this update I did not so long time ago, last week, the economic data coming out from the UK hasn't really impressed. So we had, on a GDP measure wise, we had GDP being negative in November. This is the service sector. So this is 3-month growth compared with the previous year. This is still, you know, you can see above 1, and the service sector is important because it's the biggest sector of the UK, and it's going down, and it's not looking that healthy. The PMI numbers for the UK are not looking that good either, I think. Headline inflation. So the headline inflation, as you can see, was at around 3%. Now it's below the 2% target, and it doesn't look like it's going to head higher anytime soon. If you want to know more about this and the finer details, then check out this update I did on the 20th. There you go. And in the chat today, we have Maurizio. We have also True Invention. Good morning to you guys. So if you're bearish, then should you be selling here then? Well, I think you should definitely pay attention, because this is not an inverse. This is definitely a triangle. And if we do have a break to the trend line, but more importantly, the trend defining level, we may have something like this. So if we take out 129.50, it would tell me that we probably breached that triangle and probably going to go down. So that could be something, but I would encourage you guys to go through more GBP pairs and see if there's even better setups where the market is closer to a breakout. If we take a look at dollar yen, the dollar yen is under a bit of pressure, hasn't really moved up so much lower since the market opened on Sunday, and technically we're still dealing with this uptrend. I think though that what is driving this, which is the fear of the coronavirus, is probably going to continue to influence things. So that's why I don't think we will bottom out just yet. As well with stock markets, as you notice, the markets are down quite strongly, and you know, they might bottom out, but I don't think they're going to bottom out like today, tomorrow, or this week. I think it will maybe start to bottom out from lower levels, and potentially when you start to see a peak in the number of confirmed corona case victims. So what's going to happen here, I think, if you're really bullish, then yeah, maybe you can be bullish on 109.41 and 107.64. Maybe in this little spot, you might potentially be able to get away and buy and target the upside. But if we look at the coronavirus numbers, unfortunately, it's not looking that good. I think this was clear though. I don't know if you have been able to see, but there's some people that were publishing videos from the hospitals in Wuhan, and it was literally packed. It was like hundreds of people waiting, trying to get help, and there's so many people there that the medical team, they don't have time to help them. And there's other videos online where apparently some people went to 4 different hospitals, but it's so packed. And obviously people want to go there and they want to know if they really got this disease or not. And it's definitely a bit chaotic. It's definitely chaotic over there. So I think it's fair to say that the numbers are going to grow, and obviously we're looking at the and then so that is probably going to grow. But what's worrying here is the speed of how things are growing. So yesterday when we did the calculation, we were growing with about 35% likelihood, or 35% per day. Now if you look now, latest numbers 444.74, and if we take the starting, even if we don't take, usually when you take the starting level and it's low, you get some crazy numbers. Everybody knows that. But if you just go back 1, 2, 3, say 4 days, so 44.74 divided by 639, that's a growth rate of 7 times from this. So there will be 1, 2, 3, 4, 5. This raised by 0.2. That gives you growth rate of 47%. And multiply that, raise that by 7 days. So this number multiplied by that, so you'll have 68,000 people affected by this in about 7 days time. And because it grows like crazy, it can become more and more. And we've done some calculations in the past, and you saw the numbers, they go crazy. Now, the number of deaths thankfully are not extremely high, but it's still at 2.3%, and it's mostly elderly that have been affected. They've had other problems. But even if this is not as bad, like my wife, she tells me, "Oh, Alex, you exaggerate. Like you're getting a bit too worried about this." Maybe I am. But what is interesting is this. We have all seen reports about ghost towns in China right now. And it's ghost towns because people are staying home. They want to stay safe from this virus. So China, as you know, is the world's biggest or second biggest economy, depending on how you measure it. So from an economic point of view, it makes sense that stock markets are a bit lower, that the dollar yen is a bit lower, and that Aussie dollar and New Zealand dollar are a bit lower. So even if there's no necessarily a big human loss right now, it's still influencing the economy. We did a report here on Investing Cube, and the traffic on by train in China was down with 42% or so from last year. Flight traffic as well is down strongly, because it makes perfect sense. People are not, they're literally at home waiting things out. So that explains the situation. And the way I look at this, we should pay attention to how this chart goes when it starts to peak. So what happens is that during the night in China, and this is not necessarily updated, and then usually the numbers start to show in the morning in China. But when we start to see a peak here, maybe at that point, maybe it will be more indication that we can start to see lows in the markets. You also have the CNN Fear and Greed Index. So the CNN Fear and Greed Index is a good indicator to tell you if the stock markets in the US are overbought or oversold. And they're very, very good at projecting major lows. So the CNN Fear and Greed Index is now at 47. But to reach really oversold levels, we need to come down to the levels like 20. When we were around these levels, that's when the S&P 500 traded down here in the October lows and then August lows. So we still have a bit to go until we reach those levels. Now, if we focus on the S&P for now, the S&P is just above this low here, which is the January 7th low. Now, if it wasn't for any of the problems, I would have probably said, look to get involved here. And this is also the opportunity for anyone that thinks that this thing will blow over to potentially take a position here. So if you do think that, things will calm down, then you're probably looking to buy, maybe let it go down a little bit more, maybe down here somewhere with a tight stop loss just below 31.82. That's one option. If you're more like me and you think we're not seeing the high, or we haven't seen sort of the crisis yet, then you would look for a stronger decline, maybe down to 31.49, 3,100 with stops down here. That would be the alternative. And what I'm going to be looking for in particular is the fear and greed index being close to 20, and the stock market being very close to either this level here, and obviously if this doesn't level hold, we'll probably be down here. In the long run, I do think we're going to be okay. So that just means that this will just give us an opportunity to buy at lower levels. German DAX is a bit unchanged today. I still think, if you think about it, should people be buying right now? I don't think so. We're back into this range. We're very close to support down here. And maybe down here, this is where people are going to look to buy, and it's what people that are short, they're going to book profits. And then you have this level up here. If you do want to get involved, then I will be bearish from here. For now, I'm going to treat the short-term trend as bearish below 13,643. Other stuff, this is the New Zealand dollar versus the USD. This is a bonus chart I'm showing you today. So this one, we talked about it yesterday, if I remember correctly, that it was just to sell here with a bit of profit. If it swings up, we're probably going to go down. Last week as well, we talked about the Aussie dollar about selling here. This market did indeed move down lower and it's now well in profit. And again, Aussie dollar goes down, New Zealand dollar goes down. It makes perfect sense, especially for Australia, because their biggest trading partner is China, and they're having a massive hit now because people are staying home to protect themselves. So here, there's also quite a clear-cut case. Obviously, in Aussie dollars, it's already moved so much into profit, so it's a little bit too late. Other stuff as well you can keep an eye on are cryptos. This is Bitcoin. Remember, we talked about Bitcoin. The idea was to buy here. In the past, we said buy here as well. We can now tighten this up. And if you look at the crypto space, cryptos are gaining. There are some cryptos today that are up more than others. You have like things like ADA, which had a nice little rectangle breakout here this morning. Actually, the trigger was yesterday, but you have breakout. So it can be worthwhile checking out some of the cryptos as well, because they are trending upwards and they do look to head upwards, motivated by the situation initially in Iran, but now of course because the situation with the coronavirus. Okay, so we covered quite a lot of ground in the last 15 minutes. If you have any questions, guys, just put them in the chat box and I'll see if I can help you answer any of your questions. Okay, so we don't have any questions, which is fine. So you know a little bit what's happening in the markets. You know the situation with the coronavirus. You also know my view about this risk on, risk off situation. It might be just a short-term thing, but the way the numbers are looking, I think it's going to turn worse. As well, I'm still waiting for the World Health Organization to tell us that it's all good. We're not going to have any issues. And I think when that happens, that can be the beginning of something. And something we can keep a very close eye on is how this is spreading in other locations. So this is other locations. So right now, oh wow, 65 confirmations in other locations outside of China. So there's not huge numbers, but they're growing. And again, we want to see some stabilization here. Okay. If we don't have any questions, I think we're going to wrap things up. Aussie dollar. So we just covered the Aussie dollar, right? So for the Aussie dollar right now is more about booking profits, if anything. This, from a short-term technical perspective, reached this, which is a good opportunity to book 50% of profits, if not 100%. You have the head and shoulders target down here. Now, if you do want to get involved for a second round, we can tighten up the trend of funding level to this high, and we can take fib from the high to the low, and you can see that's the breakup point here. This is actually the original breakup point. Then you got some support here. Maybe if we go up here to the 50% correction level, maybe from that spot, that will be 68 level. If we go up to 68, which I'm not sure we will do, but if we do, then that could be the second attempt here. But here I would definitely book 50 or 75% of the position, and then keep the rest for the move to the downside. And if we swing up, we can add back that to the market. Okay, guys, don't forget to like the video. It's really important. If you like it, click here, and you can also click on subscribe to it. And don't forget as well to check out our ATFX Q1 outlook, and as well the Trade Investing Cube's best trade ideas for 2020. It's a different team writing here. I'm writing in both, but there's different teams here. It's free to read if you remember. Very straightforward. Just sign in and that's it. Okay, guys, have a great day. Be careful out there, and I'll see you guys tomorrow, same time here on investingcube.com. Thank you, and bye-bye.